today, represented by Mr. Amitav Mukherjee, Director Finance and Chairman cum Managing Director, Additional Charge. So now I would like to hand over to Amitav sir for his opening comments. Over to you, sir.
Good afternoon, everybody, and thank you for joining in. Now, I believe that this quarter results have been pretty good. Hopefully, it is beyond the expectations what the streets had expected, both in terms of physical performance and financial performance. I think it has been a very satisfactory quarter. And even on a 9-month basis, we are doing fairly well. So if you see our performance in terms of production, it has been even higher than the Q4 of last year, which indeed is something absolutely unprecedented, if I may say so. Financially, of course, the prices we've been able to hold. We've been able to, despite turn down in the steel prices, we have been able to reasonably hold our prices for iron ore, and which shows the result. CapEx also we are doing fine. We have locked in approximately 3,112 crores of CapEx this year, which is already we have exceeded last year, and we expect to have a CapEx of around 4,000 crores in this financial year, which will almost be twice as much as we did last year. So overall, we have had a good run so far in this year, including the last quarter. Also, we had a major vendor conference, as we call it, the partner conference, where about 150 vendors participated. More than 250 people were there, where we unveiled our plan for capex of around 70,000 crores in the next 5 to 6 years to enable us to reach 100 million ton target. So these are the major happenings that has happened, and I think the response from the vendors was absolutely fantastic, where we gave them the understanding of the technology that we are looking for and the major capex programs along the timelines that were there. So thank you once again very much for joining, and now we can connect to individual people to ask the questions.
Thank you, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good afternoon, everyone, and thanks for the opportunity. Congratulations for a good set of numbers in this quarter. I have two questions. The first one is, if I look at the royalty as a percentage of realization, it's around 46% this quarter, much higher than the last 2 quarters. So just wanted to understand if we have started making provision for the possible higher royalty in Karnataka. If not, what event or milestone would cause us to do that?
Is that the question?
Yes.
So can I answer now?
Yes, please.
Sure. Number one, I'd like to clarify that we have made no provision for the expected. I hope it is not expected for the bill that was passed in Karnataka. So this is clearly understood that we have not made any provision at all. This is in the contingency, in the contingent liability, where we have also mentioned that most of it will be recoverable. The higher royalty is on account of higher production that is there, which is almost 1 million, about 26. about 86 lakh ton as compared to the Q3 of Q2 as we see. So it is about 86 lakh ton, and as you know that royalty provision is made on production. So that is why if you match it to sales, it will give you it will not give you this rate at about 20% that you are expecting. So because of about 1 million ton, 8.86 lakh ton extra, so that is where I think the production as compared to Q2 has gone up by 60%. So that is one of the factors for royalty. So if we match it with the sales, it will not necessarily be a straight division. Go ahead.
Thank you, sir. Very clear. The second question is on Nmdc Steel. So what was the sales volume this quarter at Nmdc Steel and how we are ramping up over there?
This quarter we did production of around 380,000 tons, which is, and in December we did about 46,000 tons. So it is almost near the given point, but the problem is dispatches. We are still, instead of getting dispatching 2.5 rakes, we are able to dispatch around 1.4 rakes, essentially because of non-availability of rakes in the circuit. Of course, the Indian Railways has now just allowed to backload cold rakes and light rakes that come in. So that will bring some relief. But overall, there's a major problem of that. But we're trying to solve it by getting in some CFO rakes there. So our sales revenue, of course, has grown up to about 2,120. But unless we have this sales quantity, we actually sold around in terms of tonnage. Just a second. So unless we sell around 165,000 tons, it will be slightly difficult for us to break even. So we are now at around 130 something. I'll just give you the figure. But reaching 165 is the first milestone that we have to run. For that we need at least 2.5 rakes a day. And this quarter they have sold around 3,67,000. So that's in terms of monthly basis, that is not adequate enough. So we have to do around at least 4,65,000 to 4,80,000 per quarter to have something in this close vicinity of the break-even. Thank you.
Okay, so production-wise, there is absolutely no problem. You are just saying that sales-wise, we are not able to get rates, and that there the bottleneck lies.
Yeah, I have around 2 lakh tons of oil per year. Right, so that is success to a lot of.
I'm sorry to interrupt, sir. I would.
I'm not really able to dispatch essentially because rakes are not there. So you see, my production is going more than the same. So that is the problem. I have to have at least 1,65,000 so that around 4 lakh something. So last month, for example, I sold about 1,30,000. And I produced 1,46,000. So that is the problem. I produced 1,43 in the quarter, 3,69 in the quarter, and sold only 3,67,000 in the quarter. So that's a deficit of 23,000, and we are carrying a huge backlog. So rate availability and dispatch is the issue here.
Okay, sir. Thank you so much, and all the best.
Thank you.
Thank you. Mr. Mukherjee, I would request you to come a little closer to the microphone as your voice is a little muffled at times, and use the handset if possible.
Okay. Right.
All right. The next question comes from the line of Sanket Kapoor from Kapoor Corporation. Please go ahead.
Namaskar, sir, and thank you for the opportunity. I also missed a lot part of your answers, so we will take it later from the transcript. So if you could just firstly explain to us note number 8 of our results and its implication, and also for note number 12. So the note number 12, it speaks about our investment in our subsidiary company, Legacy Iron Ore. So what is translating there, and what are we exactly eyeing? And for note number 8, it's regarding our investment in RNIL to the tune of rupees 1,500 crore for setting up of various facilities. So this is my first question. And second question was...
Note number 8 is advance to KVSL.
Come again?
What exactly do you want to know? Are you on note number 6, which is outstanding on INL, or can you be specific? What note you are asking?
Yes, sir. Sir, I am looking for the note says that the company has entered into a memorandum of understanding with RINL for setting up various facilities. What are we eyeing? And this is a 1,500 crore investment that we are going to make upfront, and a security deposit of 90 crore. So if you could just elaborate the project, and also there are receivables to the tune of rupees 3,000 crore something pending from them also. So will this be adjusted from that, or we will be needing to make fresh investment?
That is note number 7. The 1,500 rupees that has been paid is essentially for buying or rather leasing 1,167 acres of land, which was approved by the IRL board also, our board, Ministry of Steel, and finally we had to get the approval of Ministry of Finance. Now that land, we have taken possession of that. We are now going to develop the India's biggest blending yard there. We plan to terminate our slurry pipeline phase 2, which is from Nagarnar to Vizag. We will terminate it in that land. We were not able to sanction that project because we did not know where this slurry pipeline will terminate. And obviously, when we are terminating a large slurry pipeline, we will also be setting up at least an 8 million ton pellet plant there. So blending yard, pellet plant, and in future, if we do some what we call is the critical minerals like lithium, etc., we would keep some land for processing of the same. So we needed a large year of land, parcel of land. We have got it. This is just next to the Gangavaram port. 1,500 crores have been paid to our INL, and we are in the process of registering that land. But as of now, we have already taken possession and made the boundary wall. Now we are making plans to make investments, the 3 investments, as I said: blending yard, pellet plant, and slurry pipeline. These are at least in the immediate term.
Okay. And on the receivable front, sir, as of December 24, the receivable from RNIL is to the tune of 3,400 crore.
Yes.
So what is the update on? Please.
Yeah, RINL recently has started paying for the supplies around 1 week back. So as you know, what I understand that RINL has got a grant of around 11,000 crores from the government of India, and we hope that it will facilitate liquidation of our outstanding sooner than later. As of now, the encouraging thing is that RINL is doing well and is doing better, and that can be seen in the recent steps that they have taken in paying our outstanding.
Okay. And note number 12 is about our legacy iron ore investment. Further, we have done for some trading suspension to be revoked. So if you could just explain this 84 crore rupees investment that we have done for legacy iron ore, and the reason behind it. Yeah, note number 12. Note number 12 speaks for our investment in legacy iron ore to comply with ASX listing rules. So if you could just explain the thought process and please.
Because we are burning cash there, so there was a liquidity issue, and hence when we were pending right infusion by us and by the other investors, we had taken a trading halt there because there were liquidity issues, and unless we had subscribed to the rights issue, and it would not have been possible for Legacy to continue with their operations. So accordingly, we have taken, because this rights issue would have taken about a month to design and certify. So that's during that period, we had taken a what we call as trading halt, voluntary trading halt. We had taken. Once the rights issues were subscribed, I think we subscribed around 22 million, and the retail subscribers also had subscribed their part. So thereafter, once the subscription was completed, the trading halt was lifted. We requested for a lift of trading halt, which is now lifted, and now trading has commenced in a regular fashion.
Okay, sir, I just take the next question on offline, but the point was, sir, what are the benefits we are currently emphasizing from this investment? And secondly, sir, when you mentioned about our we are eyeing for 100 million ton 5 years target of output, and we have spoken to our vendors, and also have we made any presentation being uploaded to the stock exchanges also for our investors to know exactly where are we going to put the money and how are things going to shape up, because 70,000 crore in 5 years is a large number. So the vendor need and the update of the same, where can investors find the details of the same?
As of now, let the board sanctions each of the individual projects. It will not be possible for us to give it on to the investors and others. But that is the direction that the company is moving towards, that we have mentioned in various interviews and various press releases and various things. Yes, the nuts and bolts, as and when the board approves and as and when the competent authority approves and we go ahead, you will be intimated.
Okay, but can you give an outline for what kind of capex we are emphasizing for the next financial year in taking into account this 70,000 crore number? Our run rate is 4,000 for this year. So the averages should go up significantly from the next year.
Next year will be slightly more than that.
Okay. And so, what should be our volume for Q4, considering what we did for Q3? This was the same number we did for last year Q4. So if you could just give some understanding on how the volume should shape up for the coming ensuing quarter, and also how have been the realization trends as of now?
I think the Q4 we should be doing much better than last year. I think we should be doing at least 16 lakhs or 16 to 17 lakhs. In last month, January, we have done around more than 5 lakhs plus. So that leaves us to do around 11 to 12 lakhs in the next 2 months, February and March. Hopefully, we should be able to achieve that.
Okay. Right. So I'll join the queue for this follow-up, and thank you, sir. And lastly, sir, this pellet and iron ore product services line item wherein we are making losses, what steps, sir, are in the anvil to mitigate these losses? I know the Panna diamond mine is a drag. And last suggestion was that earlier also we have alluded to the request that the capex what we have spent, the projects which are under implementation, the projects we are going to complete in 1 or 2 years' time, we needed the details of the same in our investor presentation. So kindly look into our request, sir. Earlier also it was requested in the call, during the conference call, so that we get an idea of how much we have been spent for the quarter, for the 9 months or 12 months, and what are we eyeing going ahead in terms of the completion, also the timeline. That would give a better idea and will save a lot of time during the call, sir.
Okay.
Sir, and
I will request the moderator to limit people to 2 questions, please.
Yes, sir. I join the queue. Thank you.
Please ensure that.
Sure, sir. I've made a note of that. Participants, please restrict yourself to 2 questions. If you have any further questions, kindly rejoin the queue. The next question comes from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. Sir, just a follow-up to the previous question. You've outlined 70,000 crore capex for increasing to 100 million tons, whereas the current gross block on the book that you have for 50 million ton is much significantly lower. And previously you mentioned 50,000 crore capex to get to 100 million tons in one of the earlier calls. What has led to this increase from 50 to 70? And maybe can you outline why such high capex compared to the current gross block that you have?
You see, this figure will keep on changing till this time we get all the projects sanctioned. Most of these, few of these are at desirable stages. So this figure, there's nothing sacrosanct about this figure. This figure 70 might become 80, it might become 65. This is what we are targeting as of now. When we make a deep dive to each project, then we decide that whether this project is required or not, and the project cost that we are now doing is essentially ballpark estimate. Obviously, when you make detailed DPR, etc., the project costs themselves go on changing. Sometimes we change the method of execution. For example, we can do it on some what is called partnership mode with a private investor, and we now have a board policy for Nmdc partnership participation policy. So it can change more of the execution from EPC to partnership basis. So we are trying to get a few dispatch facilities on the partnership mode. They invest and we pay on a per ton basis. So these are right now a lot of fluidity, both in terms of concepts, both in terms of cost, and finally in terms of execution methodology. So as of now, it was the first draft was 50. When we made a little more deep dive, it was now 70. Maybe when we do it, it could become 65, it could become 80. So, but we have made a long list of items that possibly needs to be done. We have gone through that quite a few times with the tooth comb. We feel that that list is exhaustive, but we might add or delete a couple from them as we go ahead.
Sir, on that question of why this is much higher than the current gross block, I can understand there will be changes, but what is causing this such high capex for new capex? Assuming, and I'm not sure if this assumes that you'll give out some MDO, it seems like you're saying some can be contracted. So this 70,000 already assumes some MDO, and why is this capex so high? And tied to this would be last question, all of these questions together, that when you look at capex, you mentioned next year, but you're looking at 2030 as the guidepost for 100 million ton, which means possibly from FY27 there's a significant step up in capex. So what kind of annualized run rate capex do we look at? And does it mean you may have to relook at your dividend if the capex is going to be so high in 27, 28? So all of these questions tied to the capex, these are my only questions.
Yeah, we can get to the. We can think about crossing the bridge when we get to the river about 27, 28. Obviously, but one thing that we must realize that the production jump comes in when these capex are completed. Not due. So if I'm putting a 12 billion ton, let us say, screening plant, worth, let us say, at least 8,000 crore rupees. So only when the screening plant is completed that I get a one-time, one-shot jump of 12. It will not be staggered. So a lot of this growth from 50 to 100 will come up in like a jump rather than being a smooth curve up. So this must be realized. It will be project specific. A lot of investment of the 50 company is related to dispatches, where we need to build up a lot of dispatch capacities, both in terms of loading and in terms of evacuation. So we have to focus at least 1.5x or at least 2x of our production capacity in terms of evacuation. That is very important. Evacuation methods have to be fungible. You must have simultaneously capacities for dispatch through pipeline as well as through rake, as well as through conveyors. So it must be a model, if I may say so, dispatch capacities, which are fairly in excess of our production capacities, because we have seen and we have learned the lesson that if one mode, for example, if there was a light side in KK line, and then our entire production gets affected by 1.5 months. So we have learned our lesson over the years, and we believe that we should have flexibility so that we should have enough capacity so that we have flexibility in dispatching. And a lot amount of this CapEx is related to dispatch and loading capacity enhancement.
Thank you. I'll join the queue. Thank you so much.
Thank you. The next question comes from the line of Pratik Singh from DAM Capital. Please go ahead.
Hi, sir. Thanks for taking my question. Just had a hypothetical question. So as you know, the Karnataka bill talks about 1.5x extra royalty or 3x extra royalty depending on when the leases were, granted. I would assume that bulk of the leases were granted before 2K15, just that there were renewals happening post 2K15. So do we have a sense as to what percentage of our Karnataka production would fall under 1.5x or 3x, or is it all under 1.5x as of now?
Can you ask the question, last part of the question once again?
Yeah. So what kind of tax increase are we looking at if the Karnataka tax bill kind of is passed completely and the government accepts it? So they had asked for 1.5 times royalty more or 3x royalty more. Do we fall under the 1.5 slab, which means that it's status quo? Or do you think that some of our mines were before 2K15, so we fall in the 3 times royalty slab right now?
Let's say it is not my time for the going ahead into the future, but yes, retrospectively, at some period we are also less for 3 times the royalty. But personally, I hope that because this bill is likely to have a repercussion beyond the borders of the state of Karnataka, I hope the central government takes note of this and our burden of the future and the past burden is relooked at. That is what we are hoping, and that it would be done.
So just to summarize, the only impact in the worst case would be retrospective impact. No, on a run rate basis, there is no incremental royalty impact because we are already paying 1.5. Is that the correct understanding?
There is an incremental royalty of 100 rupees per ton of the mineral bearing land, and this 1.5 times, I think, is over and above our 1.5 times that we are paying. So what we are paying is 22.5, it will become 45.5 plus 20, it will become 65.5. It will have prospective effect as well.
Understood. And sir, if you can shed some light on the current supply-demand scenario in the country, given that you have been able to keep prices elevated despite steel prices going down, how do you see it going ahead? Do you think that the supply situation would continue to remain tight and would be able to hold prices over the next 6-7 months?
Well, I'm not looking at the 6-7 month horizon at all. I'm looking at the next 1 month, 2 month horizon right now. Every day, of course, the steel prices are not very encouraging. We have taken a small price cut about a month back. There are severe headwinds in terms of prices, but we are trying to see what best can be done. So, because the profitability of the company, and we'll have to take a call after this about the next 6 months, of course. We can take a call only around April. But right now, we are having a very close look of what to do up to 31st March. So I hope that even if we have to take a cut, it will not be very substantial. And I hope that we'll be able to stretch this pricing as long as we are able to. As of now, we are managing our dispatches despite these prices. So we are now, that's what we are looking at on a day-to-day basis. It will be difficult to speculate right now.
Understood. Thanks sir, for answering the question, sir.
Thank you. Mr. Mukherjee, I would request you to come a little closer to the microphone and press your handset mode so that everyone could hear you a little clearer.
Okay.
The next question comes from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good afternoon. Thanks for the chance. A couple of follow-up questions. One on the timeline as far as this uncertainty and the final decision on the Karnataka state government tax is concerned. Any sense do we have, as far as timeline is concerned?
No, your guess is as good as mine. We, as we gather from the newspapers that the bill was returned back. It has again been resubmitted to the governor. All we are hoping is that this, because this bill is likely to have a domino effect beyond the state borders of Karnataka. I hope that in the interest of the entire mining community, the central government will possibly have a look at the entire situation that is now developing. So beyond that, I am not privy to any more information on this.
Understand. And do we have, in case this 150% is being imposed from a prospective basis, do we have any clause under our supply agreements where this is an automatic pass-through, or this is something which we will have to absorb?
It will be a pass-through. We are very sure about that. All of these are pass-throughs. Even the retrospective what it is a pass-through, and of course getting it recovered from the customer is a different administrative issue. And that is what we have written in our note also. If you see the significant aspect, we have said that in terms of LCAs and option notices, any statutory levies or taxes introduced in future are recoverable from customers and bidders. So we are very clear that it will be pass-through. But nonetheless, it does affect the market. Individually, it might not affect us, but overall, if the market crashes, if the steel producers are there, if our customers are disadvantages, it will sooner or later show on sales and our dispatches. So that is our point of worry.
Okay. So because last time when in 2021, there was an additional 22.5% premium, we had to absorb it, and only gradually, depending on the demand supply situation, we were able to occasionally pass on. So this time also it will be same, right? I mean, it will depend on demand supply situation rather than any contractual pass-through of these.
Last time our pricing policy was that it was now all inclusive, so it did not look as a separate line item. But that we can change at any given point of time. But this is a pass-through. Definitely, we can convert our pricing to a pass-through mechanism, so that's not a problem at all. The way we used to do it for earlier, used to do it for royalty and DMF and NMDC. We can do it for this also. So that's not a major problem that we have. All we need to do is change our pricing structure. We declare a base price and add on a line item, and it will be shown. Today we have an all-inclusive pricing, so there are no separate line items, so you can't see that. You presume that it is always. So that's not a problem.
Got it. Sir, on our customer mix...
Sumangal, those were your two questions. If you could rejoin the queue.
One was a follow-up, so... can I ask one last question?
Excluding that, you're done with your two questions.
Okay, all right. Thank you.
The next question comes from the line of Tushar Chaudhary from PL Capital. Please go ahead.
Good afternoon, sir. Thanks a lot for the opportunity. Sir, in last few quarters, you had given us an update on a few of the projects at mines, basically Deposit 5, Deposit 10, where we could increase the EC capacity by 10% without a public hearing. Any incremental info on that?
So that Deposit 5 is not up. We are expecting it by end of February. Hopefully, the approval for Deposit 5, 2 million ton extra would come by end of February. It should by the end of this month or somewhere around middle of next month. Similarly, for I think Deposit 14 also, we are expecting that it will be coming. But those are final stages of approval of the various statutory approvals that are required, but they have not been received. We are pursuing this hard Hopefully, that is why the factoring for next year. They are factoring in these approvals, and we hope to do around 53 million ton next year.
In fourth quarter, you said around 16 million ton.
16 should be easily done. We'll try and do 17, but 16 should be. We have already done 5 plus in the month of January, as you know, we have declared. I think 5.15 or 5.25 get done in January month. So that leaves us around 11 to 12. That should be possible. It should not be impossible.
So the next question was on the commissioning of the pellet plant, which you were confident of finishing by end of FY25. So you're saying that from 2 we are configuring is 6 million ton per annum. So any update on that at Nagarnar?
I expect the pellet plant to be commissioned by the end of this calendar year. But what we are executing now and completing is a 2 million pellet plant, with a provision of upgrading it to 6 million ton. All the facilities are common, etc., etc. It's just plug and play. But the upgradation to 6 would also depend on back-to-back our upgradation, if any, of the Nagarnar facility of steel plant, and also for the market. So that we, as of now, it is not a sanctioned piece of capex. It is included in that 70,000 crores that we are talking about. It is included in that, but that as of now is not a board-approved investment to be made. It will be sanctioned hopefully in the next 3 to 4 months, and then we'll decide on the type of improving it from 2 million ton to 6 million ton. But 2 million ton, I think it should be getting done by end of this calendar year.
Okay. Thanks a lot. Thanks.
Thank you. The next question comes from the line of Rashi Chopra from Citigroup. Please go ahead.
Thank you. Most of my questions are answered. Just could you provide the cash balance as of December?
What was the cash balance? I'll put you in a second, please. Net cash position as of 31st January was around 7,696 crores on 31st of January. December, I'll have to recheck. I had the position only on 31st of January. December, I'll just recheck and give it to you.
Okay. Thank you.
Thank you. The next question comes from the line of Ronil Dalal from FY25 Family Office. Please go ahead.
Yeah, it's FICOM. Yeah, hi sir. So, is there any impact of the iron ore consumption due to the recent budget announcement on reduction in steel import duties to 15% from 22.5%? That's my first question.
Can you ask the question again? I could not understand that, please.
Is there any impact on? Yeah. Can you hear me?
Yeah, I can.
Yeah. So, is there any impact on iron ore consumption due to the recent budget announcement on reduction in steel import duty to 15% from 22.5%?
So what has been reduced from 22.5% to 15%?
I believe it was announced in the budget, right? Unless I'm mistaken.
What was announced from 22.5% to 15%? I could not get that.
The steel import duty?
The steel import duty, I think it's a different thing. That was the maximum rate of steel import duty, not the effective rate of steel import duty. So the steel import duty, I think currently is around 5% or 7.5%. That stays. So as such, that has not affected any steel import and consequently our production as such. The production, domestic production and prices of steel as such. I think that's a completely a misnomer. That is the maximum permissible, and we are actually much lower than that. So that having an impact on increased domestic steel production, which consequently has an impact on iron ore. I don't think it is correct. There is any correlation as of now. None whatsoever.
Sure. My second question is that one large private player has announced possible investments of 1 lakh crores for 25 million ton steel plant in Gadchiroli and also some iron ore mining investments. And there is another player also which is expanding its capacity in iron ore mining in Maharashtra as well. These are large kind of capacity increases and investments. Would this have any bearing on the demand-supply dynamics, pricing, or even your capex plans over the next 2-3 years? Have you reviewed this development and any impact on the same?
Number one, I would not like to comment on the plans of any other company, so that's beyond my competence to do. But if something big is coming up in Gadchiroli is unfortunately a place that is beyond our service area. There are no evacuation facilities as of now, so I'm sure even if a mega steel plant comes out there, our possibility of making supplies there appears to be rather remote as of now. Future, I do not know. As of now, it looks not viable for us.
Sorry to interrupt you, sir. The line is not clear, sir.
Is it clear now?
It's still less clear, not very clear.
Moderator, can you hear me?
Yes, now it's much better, sir.
I was absolutely speaking with the handset and everything. I don't think I can be more clear with that. What I'm saying is that in Gadchiroli, if a mega steel plant comes in, I don't think Nmdc is going to be affected by that, because Nmdc is not likely to be a source of supply for such a steel plant. Rest, of course, of the other things that are coming in from Andhra, the more the steel plants come in, the better it is for us as merchant iron ore miners. Bigger customers, more customers are always more welcome.
Sure. Thank you so much. Thank you. All the best.
The next question comes from the line of Shweta Dikshit from Systematics. Please go ahead.
Hi, good afternoon. Thank you so much. Most of my questions were answered. Just could you give some outlook on where are we looking at our volume numbers for FY27? Like we are expecting EC limit enhancements to take our volumes to 53 million ton this year, but that was something that was expected in FY25 itself, but we did not achieve that number. So what's the outlook for FY27 from here?
FY27 we should be doing, if our SP3 comes in, around 60. Next year it should be around 53 and FY27 should be around 60. Because one major project which is SP3 is going to come online, that is going to substantially increase our capacity for processing our ore. And by that time, of course, the EC has to be also enhanced in terms of mining requirements. So we are looking at that.
All right. Thank you.
Thank you. The next question comes from the line of Siddharth Gadekar from Equirius. Please go ahead.
Hi, sir. My first question on the coal blocks that we were looking to start maybe this year. Any updates on that?
Yes, I hope that by next year we should be able to start that. I think Toki should start somewhere around April next. No, not this April. I think in December next, and Rohane should be following. Section 7 modification of the CBA has been already done, and the next is Section 8 and 9. I think we are in line of going by the statutory requirements of Section 9 and then 11 would take us to the end of this year at least. Those are the statutory timelines that we have to give for each notice. And I think we should be able to do small scale mining and start the mine operational, I think by somewhere around mid next year.
So secondly, on the Kumaraswamy mine, have we received the EC clearance of 10 million tons?
No, but it's currently 8.86 or something like that. Something very close to that. I don't remember the exact figure, but it is 8.86 or 8.92, something like that. I'll just give you the exact number. That is what, because apart from the EC clearance for which we have for 9.5 or something like that, but there is also another cap in Karnataka, which is the LPAP cap. As our maximum permissible annual production, which is there in the Bellary region where we operate. So when you cap that, it comes to around 8.87 or something, or 9.2. And the exact number I'll give you slightly later. But that is the problem. And next year we should be able to do about 8.92 or something like that. Just a second, I'll just give you the number. This year it will be 8.2 Kumaraswamy. Next year it will be 8.91 or 92.
Okay. Thank you.
Thank you. The next question comes from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yes, sir. Thanks for the follow-up. I just wanted to know, overall volume, say around 45-50 million tons. What is the breakup of a few large steel companies, say JSW, JSPL, SR, and RINL?
It is generally all taken together is around 75%, 80%. But exact breakup of customer-wise for the first 9 months, you'll have to give me some time to get back to that. Exactly the customer-wise total, I don't think I have it right now.
So approx percentages range also is fine.
Four taken together, the four big parts, I have got the number. For the 9 months, AMS is 56 lakh tons. Vizag is 47 lakh tons. JSW is 84 lakh tons. So that is 18%, 15%, and 26%. And JSPL is 21 lakh tons, which is 7%.
Understood. And sir, with respect to the NMDC steel plant, when do we expect the recovery of all the outstanding receivables, the investments, and also any monetization timeline for the 10% equity stake do we have there?
The 10% equity stake will only come as and when it is proposed to be disinvestment, on which I don't have much of idea as of now. So that is something as of now on a hypothetical question.
And the receivable and advances and investments, other assets that we have?
No, those receivables will be liquidated once I think we go to break-even plus situation. And that will only come when we do 2.5 rakes a month, not earlier than that.
Understood. All right. Thank you. Thank you, sir.
Thank you. The next question comes from the line of Sanket Kapoor from Kapoor Corporation. Please go ahead.
Yes, sir. Thank you for the opportunity. Yeah. So when we look at our finance cost, that has gone up from 29 crore to 61 crore for this quarter, and year on year the number is up from 32. So what explains this increase in finance cost?
Are you talking about NMDC or NMDC Steel Limited?
I'm talking about NMDC Limited consolidated accounts.
The consolidated accounts NMDC. Of course, one has been the increase in rate. The increase in rate has been quite substantial. And we had decided Now that with the finance cost has gone up, our surplus, we are not investing in FDs. We are rather now liquidating our previous outstanding. So it is essentially because of working capital limits that we had a substantial increase from that. So that is the cost has gone up by around 55 crores.
So come again, the last point I completely fumbled. What you are trying to explain?
That is essentially because the working capital requirements have gone up. And as you know, now that we are trying to get this down by instead of investing in FDs, our surplus cash, we are now liquidating our working capital loan that has accrued. So that we are taking care of that.
Okay, sir. Thank you for all the answers, sir, and all the best. Thank you.
Thank you.
The next question comes from the line of Atharva Gupta, an individual investor. Please go ahead.
So my question is mainly on Nmdc Ltd. It was reported in the news that you have terminated the contract with Nikon. So I just wanted to understand now the operations are being handled internally by NSL. And secondly, regarding the rakes, the problem of rakes, have you spoken to the ministry, like what is being done to address that? And do we have any sight on when this will get rectified?
Yeah, first of all, the first question is that, of course, Nikon's contract ended on 17th of December, and thereafter we have been on our own. We are doing pretty fine without them as well. So we are running the ship now. We have a new executive director who we have recruited and who is now already joined us. So we have an expert who is now heading the plant. So that is some good news. The second question about rates is obviously we are talking to the Indian Railways and they have been trying their best to help. But alternatively, we are also talking.
Hovering around $100 and $102 per ton. So for next 6 months, what's your sense whether this price will move up or it will stabilize or there will be some decline? If the guidance is provided, that will be great.
I don't see it increasing too much. I'm not really optimistic on the medium-term prices on iron ore. At the current value, I think, at the current scenario of the global production of steel, I think that even at 102, it is a fair, it's a robust price. I think given this situation of steel production worldwide, 102 is a fair price. If it holds for some time, I think people should be happy rather than complain. I don't think that in the near or even in the medium term, much. I don't think it's going to move up north.
Okay. And today there was a news that US imposed some 25% kind of a tariff on metals. What's your understanding on this and how it's going to impact the steel prices, iron ore going forward? And do you feel that Trump might revert this stance or it will maintain this?
Well, I'm not going to comment on President Trump's what he's likely to do or not, whether he's going to revert that or not. I don't think I'm the right person to be answering that question. Yes, there is an import duty of around 25%, but I have not had a good look at the countries exporting to US. I'm sure that from India there is hardly any steel export to US. Even it is more sporadic, but I don't think there's a very regular steel export from India to US. So far as the Indian market is concerned, I don't think that's going to impact immediately. I have very limited knowledge because I've not read the exact breakup of countries from where US is currently importing its steel. So that's That's the thing that I cannot answer.
But do you feel that will increase the imports in India? Because if the other countries are not able to export to US because of the tariff, then the imports which will
Indian imports, we are very clear that it is from where it is coming. So we know how much is coming from FTA countries, how much that it includes Japan and Korea and others, and how much is coming from the trade. So unless we get unless I have a clear clarity from where US was importing, I don't think we will be able to have a view on that as of now. So it's been an hour now. We can take one last question and finish off.
That's the last question for today. So
yes.
I would now like to hand the conference over to you, Mr. Amitav Mukherjee, for the closing comments.
Yeah, thank you all for being there and asking the questions. I believe that Nmdc is poised for good Q4 this year, good FY26 and beyond. We are the company is poised for a quantum leap. I hope that the investors will be happy with our performance, not only in the coming quarter, coming year, but also in the short term. We are planning very aggressive growth plans, and we are also doing pretty well, as we have seen in the recent past. You must realize that this financial year, in the month of May, we had a 30-day strike. So what we are doing, what we have done last year in 12 months, we are doing in 11. And had the strike not happened, we would have easily crossed 50 million tons this year itself. But nonetheless, what has happened. And we are comfortable to, I think we should be able to be comfortably long down 53, 54 next year, given the inputs that we are making in terms of operation, in terms of the machineries that for which orders have been placed and are due for delivery and which are in pipeline. I think the future of Nmdc is bright, and we are hopeful that we'll take the company to new heights in future. Thank you so much.
Thank you, ladies and gentlemen. On behalf of Daulat Capital Markets Private Limited, that concludes this conference. You may now disconnect your lines.
Thank you.